Yeah, good morning. Yeah, today we start within the yesterday value, so there is no opportunity yet after the open. Since the open, you see that my hypo, the first hypo number one, the range long levels pre-market, and then also the high volume edge 179.03 area here around. This already got played, but in the pre-market, you see my range level here for the 2 days long, the best area, this lower edge here, it wasn't reached completely, 03, 04, but they turned already here at the 05. But anyway, of course, this is the area where one expected to see the accumulation again, or at least people trying to get into the bull control level. This is the same level as yesterday still. As you can see, yesterday when we traded the trend, you see, as I told you at this moment here, when I said, okay, they look a little bit deeper, but they stayed overall in this bull control level. Where everything initiative buying started yesterday. When I told you I'm not gonna look here for a short trade, because as long as they comfortable within the longer term traders, they have no problem. And look what happened. They got up till 46. So this is just then a balanced phase, and that ended then at 12.45 around, and we took out then with good volume the high again. Everything that was sold then again into this level of the breakout was absorbed, and it was a kind of trend. No, it was a really trendish phase till the time of US Open, and then we settled back and filled out and made a normal distribution. So, but overall, this is what I mean yesterday, what you can see, and what volume profile overall told you, that here is a test, a retest. We stood above the yesterday value, and we found nobody more selling into this level. We saw the initiative already given us a mark, a bullish control level, and now see, we are back at this area again. So what we're gonna do now is, as already my hypo number 2 was played, this was the short against the trend, remember, from the starting pre-market into the 17 with a kind of, I need to switch the monitor, sorry, here. As we see that we get with volume into the 17 level here, do you see this? With volume, weak pullback, that means strong, still bearish. We had the chance to get to the downside with targets 12 and then 08, 04. And see what happens. We're reaching the 12, we're reaching 08. We didn't reach 05, but at least 4, but 05 we reached. And now we saw the hypo 3, this was the range long level, no, hypo 1, the range long level. And this is where we now again, that means I want to see now at this volume edge responsive buying, and then we look here for a long, because this is a cheap entry area, here is bullish control level. And we don't need to force anything. We know how it looks like. It looks responsive buying, means no increasing pressure to the downside. If a try with increasing pressure, but then a failed breakout, and know what a failed breakout would look like. Strong rejection. So no weak pullback, but a strong pullback. And a double sign, again, a double rejection of buyer again. And without extending the low, this could also happen. Then just a normal range long, that would be then some selling, green rejection, testing the low at least one time again, and again buyers. So buying. That means then we look here for the cheap entry. All right. And don't force it. If we don't see the trigger, then this is no trade. This is the advantage we can then get out of this situation. Now we look at the delta. So we have the push now to the downside. And what would now a breakout? I'm not looking here. For example, I'm not looking here for a short breakout, even though it can be successful, but this is the last bull control level I do not want to see this kind of breakout here. I would love to see now that this breakout fails and we going back into our main distribution from yesterday, as this is a bull control level. That means they have, at least, if they're interested and say, no, this is a unfair price, they have then the chance, and then it would be a good long trade. Doesn't mean this now have to happen, but if we get the signs here of strong rejection, this would be wonderful. We then would look for a long trend. If we don't get the sign, then in my case, I just stay flat. Even though the trend may run to the downside targets, 94 and then also 88 area, a low volume node in the composite profile. But I'm not gonna trade this because this is we had some really good bullish signs. So it's just a little bit an edge, a higher probability for me than it can fail. Okay, you can trade it if you have a preparation and say, yeah, this is my preparation. So just technically from the trigger side, this is looking good. That means the short technically is looking good. Weak pullback, holding new pressure here from in the offer liquidity. Technically, if this was a prepared level, this is what a good, at this moment here, this is what a good breakout looks like. Increasing sell volume, weak pullback, all right? One could have gotten into it cheap around the 03 area, but as I told you, this is still, this is not the area where I'm looking here for the short. If you have a preparation, you can trade it. And technically, this would a trade, technically, where I would look to go into it because it looks technically very, very good. Oh yeah, they're strong. All right, so they're very strong, selling into it, forcing to get lower and lower, even put liquidity in, of course, yes, that's right. The DAX is strong. The DAX is strong, that means stock just with the open got up around 30 ticks now, and we have the situation that this is of course not good then for Bund. If the stock is strong, Bund is weaker. We are now at the area of separation. That means the last bullish level from the composite profile before getting in a lower distribution is the week 50, the 84 to 88 level. So this is where we right now. So see this here, 84 and the 88 level, you don't see it, you only see it in the composite profile. I can show you. So here is the 88 level. Here, see this low volume node here, this dotted line here. And this is where one can expect another bullish level from accumulation, which we could see here from the Tuesday. This was the mark, the range long. May you remember yesterday I told you this is the range long mark at the 90, where we were looking for a range long entry. So of course this is still also a bullish level. So what you can learn in this moment is, if you have prepared this level as a list, as a line in the sand, so let's call it separation from the long to the short side, you saw that I didn't prepared it. So this is just discipline then, in this case, that I'm not gonna take on a trade. This is not prepared because we're leaving my prepared level. But what you can learn anyway, what is still a good example, as I told you live, during this trade was about to unfold. This is very important. If you're still having problem, and this is no shame, to get some information that gives you at least a little advantage about a profitable breakout or more a probability of a failure, then you only have the moment of when a balanced phase of a market get into imbalance, and you can measure at least in this very moment at least one thing, and this is number one. First, is the breakout confirmed by strong volume? Okay, you can always ask yourself, you put in your delta, look at the volume and see, okay, just significantly in a rangy market, this is what volume would look like. This is then what more trendish initiative selling looked like. This was our hypo number. I need to show here first. Hypo number 2, genau. Hypo 2, hypo 1, and then back hypo 3. So this here is then a strong, see this here, selling volume. And then you look at the next just candle. It should be at least 2 ticks range, or a what's also good in my case in Bund is a 30-second or 1 minute time frame, but the 30-second is quite good in Bund to get a valuable information out of the noise, to get a signal. So we look first measuring the pressure, okay. Then we make a note. You can make a note with the starting when you're analyzing it with the back test. You can analyze it with the back test and say okay, number 1 trigger, number 1 we have very strong volume when we break the level, okay. And then you look at the second thing is the pullback candle. This is obviously this thing here. I make it a little bit bigger so you can see it. See this little green candle here? So this was the pullback situation. It means people get into short, and now you see a weak pullback. Weak pullback means that you don't get some candle like this here. Alright? This would be a strong rejection. Boom. That means almost 2/3 or the same length of the before delta candle, and you would also have some gut feeling you would develop then if you see this. So big turn, quite big and fast move to the upside. Green, you would see also in price some lag, already you can smell the excess on the downside. So but see this, they get down, you see even the candle turn, and then you see a weak pullback. So then this would be, you can make like in your mind, you can say, all right, then this is okay, trigger number 2. And you can now just say, in the big picture, is this also the level? This is, okay, sorry, this is step 2 and 3. Step 1 is to say, in the big picture, is this a level of interest? All right? You would say, this is a level of interest, call it a level of interest, short opportunity. This is what you would say, what you knew about this area here. You could have marked it, for example, and say, okay, number 1, is this even a level to watch or not? This is very important. I can tell you something. This step number 1, this will be the most important for your account. This is the most important because, first of all, the activity levels that are prepared in your preparation, that gives you then, with time, the advantage over your trading is more important as the micro level, if you find a 1 tick or 2 tick, a more expensive or cheaper price to enter. This is then crying on very high level. We don't talk this too deep because this is more important, because you will see then from time after some time that you can rely at the very first on your prepared levels. So we just imagine now this is a prepared short level. You see it in my case it wasn't, but this doesn't matter right now. We just imagine this was a prepared level. Then you know at this moment after the open already, okay, what must be the visualization when we're going down to this area? And then you say, okay, at this moment, wow, we're very close, now I need to be concentrated. What do you see? I see already delta and price is going down, that everything is okay. So that means at least it's not looking super bullish. You don't get this delta at this time. It's good to not see this delta here, okay? That means somebody buys and the price is falling anyway because he got absorbed and the little phases of sellers are enough to get the price lower. So you see this kind of neutral or even this kind of delta we see here. This is super perfect. And then you wait. You know, activity level for a good short with a good reward. We imagine that this would be the case. Then you see now trigger. All right, trigger 1, cool. Very, very strong selling moment. Very strong selling moment. And then trigger 2, wow, cool. very, very weak pullback at this moment. That means nobody is trying here in real time. This is not a lagging indicator, the delta, but this is a real time, a leading. That means you see at real time what is happening. See, nobody really is about to buy at this moment. Okay? So, very, very nice. Means trigger 1 and 2 is given, and the most important thing, this is the short opportunity from your preparation. What you do now? Now you're quick. You have everything you need. You don't hesitate. Your mind may hesitate and say, I'm not sure, let's wait 10 seconds later and 30 seconds more. Oh, okay, maybe now this is this is maybe now the buying rejection. No, this is the trigger. This is what you can rely on. This is then what you can also then measure. And you can only measure if you're always doing it the same way. So, all right, you made the decision. What you now know is, okay, I want to have an entry at a cheap price area. What is the cheap price area in the Bund? For example, this is the volume edge from the pre-market. This is the starting volume created with the breakout. Means in Bund, I'm normally having in a normal liquid order book, what we have today, at the moment at least, I didn't watch it at the breakout moment, I go with a 2-tick stop above, in this case above the area, not only where the breakout happened, but where the volume edge is. That means when we have a high volume edge created in this profile, this is here, then I would go 2 ticks above this edge. All right? But in this time, the high volume edge, you see this here is the high volume, maybe I make it a little bit scrolling forward. So, but in this kind of profile, we have even the luck that the high volume edge is even the very lowest point of the chart. So the 05 level. You may now ask yourself, okay, what he is talking isn't not always the volume edge the lowest point of a distribution. No, it isn't. Sometimes the edge is already here, and the volume on the downside, if you would look then at market profile at a bigger picture, would be some kind of single prints. That means it would be just here. This profile would only go from left to the right, only to this point here. That means there would be a reasonable, seeable volume edge at this level. Then this would be then the stop 2 ticks above. But you are lucky. In this case, we have at the very low still a reasonable amount of volume was traded when they made the turn here. Okay? Hope you understand. Stop would be then in this trade at 07. And then you have to decide with your strategy what is the reward. So we just imagine you see reward is the next control level, our yesterday range long level, you know where the bulls still were, this was the 90 level. Then you know, okay, the breakout went to the 03, 02, and I have a reward or opportunity to 90. This would be 13 ticks. And now you can say, what are my strategy? What can I normally make in Bund, and what is from the statistics? You can evaluate and see that this is possible all day long to have at least some trade with a 2-1 risk reward. So you know, as long as I get 2-1 risk reward trades and they are at least 10 ticks of profits, then you can go with a 5-tick stop and say, okay, that's okay for me. I'm in Bund, I can tell you can work normally if you get a cheap entry. And the thing is this a fiction? Do you even get a cheap entry? Yeah, most of the time you get cheap entry. And cheap entry means, for me, the best possible entry in Bund is what I've statistically have proven is you get a 4-tick stop opportunities. That means you can enter with a 4-tick stop and you can prove yourself. If you have a 4-tick stop, would mean I don't change my stop. It is always this 2-tick above, in this case the volume edge. That means there's no way to cheat this. That means this is given. At this moment when I make my decision to take on the trade, I know stop have to be at, in this case, 07. Okay? 07 means automatically the cheapest price for me, or a very cheap price to enter, would be the 03. So is it then realistic, this is the question, to get this kind of entry when you're measuring stop, where this is your rule, this is my rule, stop rule, this 2 tick above the edge where something happened, switching from balance to imbalance. So yeah, in I would say in 70-80%, okay, not be so optimistic, let's say in 70%, but at least more than 2/3, you get the entry based on your stop 4 ticks away. So that means when you're seeing, look, the trigger 1 is given and trigger 2. This is the second candle. This here, the bar. You see it by yourself. It pulled back even a third time to the 05 level. So if you put then a limit sell order at this moment when you made your decision, and this is, as I said, very important to execute then every trade, you got the probability here then to get filled, and you see then in this case you even reach the target at the 90. Sorry, 90 is here. So this gives you even a 3-to-1 risk reward. Triple chance of profit to 1 risk. Isn't this superb? Tell me. And now what is what is now the conclusion of it? And the conclusion is that you cannot control and you do not know in a certain kind of way if a breakout will lead to a successful trend or a real move then with this 10-12 ticks profits. You don't notice in this moment. All right? You don't notice. You know this is a good opportunity because this is prepared level obvious. You know that this is the control level of the bulls. You know if they really cannot take it or not willing to take on it and hold on, then of course you have proven, and remember I didn't prove this because I didn't prepare this lower level. Now I know this makes sense what I'm saying because of course now I see that this wasn't holding because I didn't expect it. But anyway, so you know at this moment you don't know if this is giving you, if this trend will work out only because of the strong volume that got into it, all right? But seeing now that the pullback is weak is giving you this minimum edge combined with this, and we just imagine this is an important level in the long term, gives you the important edge and advantage to risk this scenario. Because I will tell you something. I haven't measured it in totally. I mean, I don't have I cannot prove that it's 100%, but I can tell you something. Your win rate will significantly higher if you wait with a breakout scenario to first, again, I have to repeat it again and again. It is a picture prepared level where we see the ability for a good short. Number 2, we go on with the micro picture rule, strong volume taking out the low and weak pullback. And this gives you just this little opportunity. That means still maybe 50% of this breakout will fail. Okay, now this is exciting. You may be now excited and say, wow, I thought this is the technique where you then always get a good breakout. No, that's not right. But at least 50 or 51%, let's say, this will lead to a really confident try to make in this example, short trend. All right, this is important because you can then expect, if you see something like this, pressure on an important mark, a weak pullback, then your decision to get into the trade. Then you will get at least the chance that the trade will not immediately back up again. Because if you see the signs of weak rejection, you at least get the chance that they will turn around, try the low again, and then maybe, with a failed example, get back to the area. But do you understand that this kind of behavior gives you again an advantage to not get immediately stopped out with the -4, because this is what we wanna try to avoid. But you get a time to make decision now with your stop handling to even reduce then your stop at this moment when you see that they fail the second time and boom, get now quick rejection. Imagine this would have happened. Then you can turn your stop closer, maybe to -3, or if for another stop rule, if it took even longer, then to the entry level. But in this case, I would have had my stop then only at -3. And if it even took longer, that means we see this kind of behavior again, take it out again, and then boom. Then at this moment, I would make the decision. They even not failed one times again, but the second time making a low and then boom, 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 quick rejection by the buy side. Then at this moment, my stop would have been already at the entry level. And this is what I want to tell you. This kind of handling your trade without just going into it immediately gives you an advantage. And I can tell you something. With this trigger, working with this kind of trigger, strong and then weak, this is important. You reducing your immediately getting stopped out breakout trades reasonable. So I will measure this for now. When the August is finished, so obviously tomorrow, Friday, then I will tell you I measure my breakout trades with this technique, which I have now used for the Bund, strict and consequent for 4 or 5 weeks now. That means this new stop rule. And I can tell you that then the result. What I have seen so far yet is, and I will measure it then with numbers. So we can evaluate then a more significant number. But I can tell you already now, this is about only in less than 20% then of the time it's the case that you get then the immediate stop out. And this is a sign of you getting better than in trading. When you see that you don't get so many times trades when you're starting the trade, boom, 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 get immediately stopped out. That means you have a lack of knowledge. Yeah, that's very important. And then you see what a low hit rate you then only need to make money over the time. Because now think of it. If you have, let's imagine, 10 trades made in a month, 10 breakout trades. You make 10 breakout trades. We have learned we cannot avoid with these techniques still 2 out of 10 immediately stop out. Okay? That means you have 2 trades with immediately each 4 ticks in the sum, then 8 ticks minus. And now imagine you only get a 30% win rate. You have 3 trades with you make like this. In this trade was let's say this is a good example because this is not too optimistic and unrealistic. You make in 3 examples still making 13 ticks, means I round it up. This is 39. No, this is 39 ticks plus. And you have another 3 trades where you have 0 because it was some kind of this moves when you can make adaptive stop handling, seeing they play and trying to play it again, rejection. No reason to hold on. You get then with this technique to opportunity 3 with O, and then there are left another 2 where you at least avoid to get -4, but in my case, you have seen it yesterday, my stop rule. This time it didn't work out, but you know the reason, because of the thin order book. So anyway, we do it like it really is. We get them 2 times, but avoid -4 per trade, but only -3. Means we get in 6 minus again. That means at the end, you can help me now please, we having 39 ticks plus, and we have 8 and 6, that means 14. That means 39 minus 14 is then a 25 ticks plus. And this, ladies and gentlemen, is with a win rate of only 30%. That means 30% of your trades were failed breakouts, but 100% were lucrative trades. And that's the big thing. And that's the big thing. 30% win rate is what you need. In this example, I think this is a fair and good example for a trend play. And you see, even this was only a mediocre trend play. And I even didn't took the whole profit because I knew the next area of interest, the low volume node, was at the 89. So we only got this 13, where is the 89 here? We only got this 13 ticks profit. You see, this is more than realistic then, and it's also in the big picture. But see this, you have a 30% only win rate to make 25 ticks. This is with one contract. You can also, if you're big enough, trade this with 5 or 10. Then it's not only 250, but 2,500 euros in a certain time period. This would be realistic in a month, but this is only measured now with one lot. All right. Anyway, what I want to tell you is you only need 30% win rate to make 25 ticks plus. You made 39 ticks plus overall and lost 14 ticks with this adaptive stop handling because using the right trigger. This is what you need to work on when creating a play. First, big picture level, only trade this there. Second, find triggers for the entry. Third, find triggers time-based and most important also impulse phase based. That means, do people invest more and more into one side in the invest time to find the handling, the management. All right, profit is also given from your big picture preparation. So execution management and management phase of the trade. Execution phase and management phase. This is what you need to develop your plays around. And management phase needs what gives you reasonable triggers to move your stop during the trade. This is very, very important. And if you are a lucky person and also working on your mindset, then one day, if you can make it, and this is the most important thing here, then this is technical stuff. You will agree. But this here, if you can handle it to get into 100% lucrative trades, you only need 30%. And I'm not gonna blame you. And I will be fair. At the beginning, the greatest problem, and I know there are some people here in the stream, they're already some years even in trading. You may underestimate your skills. I think on the technical side, for those guys who are more than a few months or even a year or longer, I know there are some guys, they have tremendous, superb technical skills already, having a knowledge about the market, but still underperform. You can be lucky though, because the technical side, you're maybe already a pro. I can tell you something. Maybe there's some people out there that are even much better than me, but don't make money, but losing still €1,000 a month or whatever. So the thing is, what you don't know yet is, because you may not have a system. If you have one, don't feel fronted by me. then everything is okay. But if you're not having a good playbook and psychological journal where you measure your trades not only from the technical side, but also from the psychological side, where the hell should you know then if your trades are lucrative or are lousy? I can tell you what, you don't know. You only measure maybe winner and loser trades. Of course, you measure then additional technical factors like where did I get stopped out, how many stopped out, what was the drawdown, what was the open PL, everything your trading platform, your charting program, even no matter if it's TT or NinjaTrader or Sierra or Multicharts or Volvic, no matter what. Of course, I know they all having this additional data they collect, which of course are also important. But the most important for your development, what you do not know is what of those, let's say 10 trades out of the last week were lucrative trades and which were lousy trades. And if you start, think of it, if you start switching your thinking away from comparing only between winning or losing trades and fading to lucrative and lousy trades, not only your mindset and your pressure in your brain and your gut during trading will lighten up and make it more comfortable, because you create then new behavioral patterns when starting to measure this way, but also you getting into a new kind of, okay, that's what I said, behavioral structure thinking, because your brain doesn't gives you this extra pain anymore when you lose, because at the end of the trade you have a system where you of course also measure was it 2 ticks plus or 3 ticks minus, but at the end you got a feeling, for my success, for the process, the most important thing I know has it been a lucrative or a lousy trade? And then it makes you more self-confident to feel it is like a cool new sports game in your trading, in the way you trade. You're looking at the monitor, you're making your preparation, you go into the mouse, you're clicking your trades. This is a new now motivation coming into your body, a new process, a new structure now in the way you take on trading, this new kind of way. Even you trade maybe a year, a half year or 2 years. And then this will change you and give you now your renaissance in your development of your trading, let's call it the renaissance, and get you to a new level, because you now say, you know what, if I have worked out a play, and this is the more boring part, this is back testing, this is sitting on a Saturday or a Sunday or in the evening or in the morning hours where the exchange is closed. When you just testing back in your market, okay, with a certain play, with a trend play, and you measuring just the parameters. What is the normal volatility of my market? Okay, I got stopped out with 5 ticks. Okay, here I got stopped out with 7. Here with 3, here with 1, here with 7 again, 5, only 4. Then for a certain market, for example, in the Bund, if you're measuring the right control levels, where you see the initiative setting come in, then in common way, it's always never more than 4 ticks. For example, you have your stop at minimum at 4, and then you have a high probability if the breakout and you measure the right way, you don't get stopped out immediately. This is the first initial brief you need for the trade. 4 ticks, okay? For example. And then you're measuring how good am I in spotting the targets area. You find out first time maybe, okay, I'm a little bit too enthusiastic, overestimate the moves it can make with the first initial move or the second wave or whatever, and say, okay, I have to reduce it. Okay, then you see, all right, my market gives me in this certain times, when I prove it, I have proven 20, 30, 40, 50 times the last 2, 3, 4, 5, 6 months, all right, to evaluate statistical valuable data. You say, okay, normally I get 13 ticks in common, and sometimes it's 20 when I see this mark is very, very important, or I see this, or see, okay, but at least minimum of 10 or 13 ticks or something. And I see, okay, the other side, I see you would have just, on the technical, just plain vanilla, only its mechanical technical side, I wouldn't get stopped out with at least 4 ticks. So that's the way you start. And then you make fine-tuning more and more. And then you write it down on a sheet. You write everything down. You write it down to see the phases of a trade where you can control, because you say what trigger you use for entry and for the execution, and what trigger you use after time, and different phases for the stop handling. So this is the things, imagine this is the things you can control, where you can say, if there is only one violation of my rules within a single trade, that's the moment when you say stop cheating finally on yourself. Please now stop it, change your trading. Then this is a lousy trade. No matter if it's a loser or a winning trade, it is a lousy trade. And then you will see where your emotional, let's call them problems are. You may find out in the beginning that you maybe have already quite good in spotting these moments for a good trade, for a good prepared trade. But you see, in the history, when you then judge your trades, I always moved the stop maybe too fast. I always moved the profit closer when I see it cannot made it in the end. So you see, wow, this would have been very good profitable trade, but I had problems in my stop and target management. And you know what? That's totally normal, because your mindset, your emotions, your old behavior patterns will, let's say, force you to make moves and changes to your before good planned trade. And this is against statistical and mathematic rule in the markets. Then it will not work. And now when you start measuring this, if it's lousy, and this means this whole of parameter you can set before, and know if it's lucrative, then you will find out if you made 100% lucrative trades, for example, and still having a red P&L, then this is just a sign that you have to work on your play, on your development, and you made adjustment on this side. But this is not so difficult comparing to the other problem. When you see that you're just not having like I had, that I only had 50% profitable trades and 50% lousy trades, then you see this is more difficult to make changes on your mindset, because even if I knew for months what the problem is on the mindset, do you think I was able to change it? I knew it. After every trade I was wondering, what the hell? Why did I move the stop again? So, and this is what I need to tell you then to come here to an end, but I think this was a very, very important information I gave you here in this opportunity. The thing is, for this kind of mental work, I attended psychological help. That means there are some real psychologists, doctors, medical psychologists that have also a trading background. There are, I want to make a commercial here, because I don't get money to advise you one of those, but you can go, of course, to Twitter. There are Dr. Brett Steenbarger, who is working with SMB Capital, one of the most profound and oldest trading and prop companies in Wall Street. Then there's, for example, Richard Friesen, who is a clinical psychologist and also was head of the, I think, San Francisco exchange for 20-30 years, also was pit trader and also psychologist. And they have very, very good programs where I still in one of those. and helped me to get, for me it's very important, I'm a really, let's call, I don't find trust in another person very quick. I need much time. I'm more the scientific guy. I want to know everything. I ask till they burn out, because this guy, me, is asking so many questions. This is from my life perspective, what I have just experienced in my life. That's why I am so. You don't have to like me that I'm like this, but for me it was important to see it's scientifically proven. It's not bullshit and some internet guru, self-named NLP guy who I don't like those people. I don't care. I don't trust those people. So I want to see that there is real scientific background. So you can read books, what I did, to first get into the material, to prove then the people who want to give you advice as well, to see if this is something in context with the actual recent books and scientists' knowledge. So this is for me very important. But these two guys are really, really good. And Richard Fries, in my case, where I'm working with a journal. It's called Mind Metrics, and also SET journal. This is what I'm doing. This means physical sensations, S sensations, E emotions, T thoughts, SET. This means I'm tracking every single damn trade in the execution phase and in the management phase. Still, even, right? Also this week and last week, every day, every trade in 2 phases. And also then the mind metrics is where I measure what it is, what made sense to measure. This is very important. You can measure you to the death in trading, but you just find out what is very important and what's the most recent thing to measure, and most important thing to find out if it's at the end then it's a lousy or lucrative trade. And also there's some online course where you can work then just from the scientific side, scientist side here, what the brain is about to work. In my former, like I call it, theoretical trading experience, I already learned a lot of these things. But I can tell you, if your nature of talent, you may not need this, what I need. And then you can be lucky because you maybe your brain is already built in a way that serves trading better than a normal guy. Because a normal guy, no matter if you're a professor or a cleaning man or woman or work in a store or are having an economic degree already, nobody cares on the exchange, because in the exchange what got triggered are your survival brain. And survival brain is the oldest part of your brain that protects you from dying when you're in a fight in the jungle, of getting eaten by a tiger or dying just because you don't find food anyway. And this is this flight or fight mechanism as well. And you can manipulate as long as you want in trading and keep on dreaming, but I will tell you, you will not reach your target as long as you don't accept that every damn human has a kind of survival part in its brain with a fight or flight mechanism, which is just triggered in trading. That means you obviously don't know that every time you are entering a trade, you are in this situation that you will, if you want or not, trigger this old mechanisms, and this make then these mistakes in your entry. Maybe your entry technique is already very good, but it makes you then move stop too early or set a wrong stop because you're afraid then to lose money. You will change your profits, your targets, draw it closer and closer as you see it cannot get to the target. And you also, after a losing trade, have then so-called secondary effects. This is then revenge trading, getting more trades as you wanted. That means you even put more noise into the market. You have a good phase maybe in the market that failed, and then you get into revenge trading. Okay, take this one. No, now take this is the short. I take the short. Okay, no, here's the short. Oh, no, I got so. Okay. So this is also then additionally coming, and no matter. This is then what you need to find out. This is something we can just, and also this will be then part of our mentoring. We will tell you that the process itself is the key to success and find joy in the process. And we can give you, let's call us more than the expert in this levels, we can give you the very good technical skills, auction theory, volume profile. You, of course, we making ourselves some kind of naked, as you can prove us already for 2 months and see what our hypos are and see how, if it works out or if we cheating on you. You can see this. This is I think very transparent. But we also can give you then the important information of the importance to have a structure where the mental thing, the psychology in trading also is a very big amount, and I will tell you it's 50%. So it's the equal weight to the technical skills. So, but at the end then, we can give you the power and I think the knowledge to tell you how the process is working. But then at the end it can be that some little part at the end you cannot make by your own. And where we then cannot help you anymore, because this is then the fine-tuning of your psychological, of your trading mindset. And don't be then ashamed to attend some program or an online course or something else to make then the last steps. But these last steps may make the difference then between becoming consistent, profitable and underperform. All right, let's make a break.
Yeah, what to do now, huh? What to do now? So, unfortunately, again, you see hypos were played in the pre-market today again. And then, unfortunately, the market was leaving my prepared area. This can happen. But, what can we make now out of this situation? We see there was a trend. I couldn't participate. Was not prepared. Okay, then watch for new opportunities. What do we see? We see, and we're going back now a little bit. And don't watch my writings here anymore. We don't care for them right now. You see, in the big picture, our targets area was the low volume node here at the 89, and I said before the week 50, the 84. So I saw, right, if we now getting into a short trend, this would be then the first areas where I would think of, if it was a prepared trade anyway, I was thinking of, okay, this would be the target area. And you see, wonder, what a wonder. The reactions took place exactly around these areas. See the 89, 90 areas, this balanced little pullback phase, and the stabilization phase around the 84 area. So no bullshit. You see, of course, the importance of the levels. I always either let the computer compute and paint in or put in by myself. But I know the importance of those levels. And you see also the importance here when liquidity is coming in. Liquidity support in the bid means they want at least some part of traders to end this short and participate and get it on cheap prices here, cheap entry. Anyway, what can we do now? We see a V-shape transition. No double bottom, V-shape. Means we have another strong leg here. Another strong leg to the bottom side. Prices come up, getting up again, more V-shape. And now you see we're getting here again to the selling control level. It's obviously the selling control level because this is where the initiative selling started. All right, here. From the 06, 5, 4, 3, 2, 1, boom, 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 here it started. Of course, what you will see here, of course, we will see what? Of course, technical reactions. It would be very, very uncommon to not see at least some technical reactions on a selling control level. That made sense to us. All right, you see this. People do react. Boom. And now something interesting is happening. Because so far you were not in this trade. And so far in this area here, I would not take on for a trade. This is for me speculation. I have proven many times that this is nothing I want to participate. This is not fitting to my mind, to my kind of trading style. Anyway, for me, I would wait now to see some signs. I want to see now the initiative of a excess on the downside. This is starting right now with this V-shaped transition, okay? Means a V-shaped reversal after hitting it with hard selling power. Look at this. At the moment, you see, this is a leg and price is already up here again at this level. See, this is a textbook example of a beginning excess, because look at this. This is the 15-minute chart. This is not kindergarten 30 seconds what I do where we do trade. This is a really beginning good sign of a excess. All right, on the bottom side. Now, what we are waiting for is we get a confirmation that this is really now failing to get to the downside again. A confirmation that this is really failing to get now down to the downside again, because this here is, first of all, normally the best cheap price to now re-enter the short trade. All right, this is just technically now the cheapest price for re-entering the short. So you can play this technically. I mean, I would at least wait to see some responsive selling signs, which we do see here. All right, you see this 1 and 2. Every time they get to the higher area of the selling control, you see boom, boom, boom. They're starting to take profits now. They're starting to take profits. Sorry, do you see this in this phase? No, I don't see it. Okay, but you see it here. Even though they made some pulling back here, you see this pulling back here wasn't confirmed by delta. There was not much selling power. You have to accept this. This is the advantage that delta gives you then. But here you see more people sell and longer. More people say short yet but strong. Anyway, so this is the moment when you see this, okay, still ongoing, this is a region of opportunity. You say now, okay, click, I'm getting into the short. Now you wait. And now you know, this is the beginning of an excess. That means strong rejection and wonderful V shape. Very strong. An excess means where can prices then go? I can tell you, prices can go, of course, anyway, everywhere. But when you look here at the profile and you see that the open range was built here, and then we saw first kind of initiative selling in a region that isn't so important to me at the moment because the pre-market already tested the 06 level. But anyway, you see a low volume node. It means you're already now measuring positive signs for a possible trade. If we get back then to this area of 14, we then have a high chance that we even see the 20 and 24 area. We would look for a long. And for this, we want to see how the market behaves before. And this given us some wonderful advantage to measure now behavior with the delta. Look at this. Okay, again, to make it more clear. Situation number 1, we have a starting excess because V-shaped, no second leg. You see this? Boom, 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 boom. Where is the second leg? No second leg. Okay. Shifting back to the initial selling control level of the more important level. You see this? Reaction is really big. People are going, taking profits, and I'm sure somebody technically and retail's getting into short also. What would be now the confirmation that this is real at the moment, no more interest to go into the downside? Of course, we don't want to see a leg now, a bigger time frame. This is going even again to the upside. We don't know if it's then going to there or there, but this is not what we want to see. What we want to see is that we see people getting in shorts. You see the separation already here from the profile, and here the VWAP at the moment, or 97. We don't want to see that they get above that, but again, already here, responsive buyers coming in again. Okay, then that would be a confirmation. Now we have really a beginning excess, and it's even confirmed with this very important signs of strength, only dipping back maybe to the VWAP or to this low volume node, but not making a second leg. So look at this. Wow, look at the delta. We are even only reached at the moment, I will call it, this is not the POC, but we only reached this HVN, this high volume node. Look at this. Boom, 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 pushing deeper, deeper. And then they say, fuck you. People aggressively starting to buy here. And look at the footprint. No matter how your footprint settings are, you will see it in a different kind of graphical visualization. But you see this green dots here. This is already buffering from the downside, protection, support, liquidity providing from the bid. That means, hello, I'm ready to absorb your selling. And then here at the 98 level, they pull it even as they took it out by one tick, but they're still coming back here. No, I'm still here. And what you see then here is, of course, everybody who's watching this and is not totally, brain fucked, switching now again to active market buying. You don't believe me? You're waiting for your damn lagging indicator? Please don't. Look at delta and footprint. You see in real time and live. And before other people who are only using their lagging indicators, what is about to happen here? Providing liquidity, level 2 data order book. And now, people buying the hell after they sold into the, again, 513 contracts, but could not hit the bid that they push it lower, people getting back and buy 170, 614. You see this? Now refilling the bid. Hello, we're interested now even more to get into a long. Refilling the bid. Active buying. Boom. More confidence. More active buying. Taking it out. Now we are in comfort zone. That means now they're in control. We can now pull back to this level again. We already made 1, 2, 3, 4, 5, 6, 7 ticks. And look again here at the trading window. You see here, we are now in a situation that the first bearish control level is ran down, ran down because people didn't care. There was more bullish confirmation bias in this situation. So more people were, of course, then also confident, seeing that there's more bullish power in this trade when trying to pull back to make the second bigger leg at a bigger time frame. So that's what we see. That means we got here a confirmation. No, I don't want to see prices lower. And there's some big guys who are saying we pull liquidity here and then boom, active rejection. This is a wonderful bullish pin bar candle in the delta that tells you at the level where it is important. This is also very important. We don't measure here or here. We measure here where it is important. All right? At this edges of the volume, at the VWAP here, at the separation, auction theory from outside inside. And you see this, how they react. And this is no indicator like your EMA or some other thing, which is also totally fine to get a overview of your bias, big picture, etc. But for the micro picture, why should I care for a lacking indicator? Anyway, this was something very interesting in this moment. That means now at least you see here are at least some interest of people who want to buy. So that just means nothing that we will get here up to this price area, because you see this big separation still from the overnight low and the open range. But I told you this is just something we measure to see if there is a opportunity to get to a certain level. And the certain level at this moment, when we see boom, this rejection was just that now we have a high opportunity that they take out this bearish control level and may test then the level of 08, because this is the last level of the first initiative. This is the last volume we saw. People got here starting, anticipating into the short, the bigger time frame players maybe also. And you see, this is where the action started to happen before hitting the more recent, more interesting and more important level. But anyway, this is what you see then in option theory when you draw also the at the moment volume. We draw it to this very moment where we didn't know, but this was about to happen. You see then, boom, here this was about to happen, all right, here, you agree? This is where I draw the volume. If you see, all right, here we have the separation, and we have a now higher probability that they take out this level, testing at least LVN and getting at least, or getting also to this volume edge above here to the 9, 10 level. And see what's happening. This is now our new micro bull control level, 89 to 72 around here. Sorry, this year. 99 to 12 level. This is where the rejection took place. And see how the prices now reacting when coming back. We see they're in control now. They made some ticks and now we know they can pull back. This is normal, that's okay. But see how they do react at this level again. See how they do react. So they're trying to push lower here, but at the end, already starting here, accumulate, and again starting here, boom, reject them and getting in. And see this, boom. Testing now the area of importance. We fill out now this lack of volume, this low volume node. Look at the profile when I draw it now to the right side. So they repair it kind of, and we see still not having much power now to fill out and make it the same look like we have here. That means this is some weakness. So that means, okay, they took out this bearish control level, but you see, okay, for me, they're not super bullish already. That means, okay, let's see, maybe prices will range now in between these levels here.
So the bull control level where they could not take out. So the most recent edge is here at the moment. Let's tell me here. Is it? You will agree? 98. I would say yeah. This is the more important edge here. 98, 99. This was only just a try on the downside, but you see nobody really wanted to trade lower than. So if you want to see it in the footprint, I can show you also. So there's no fake what I'm telling you. Look at the footprint. See this? The people who wanted to sell into it, the most of the selling took place here at the red. Look at the imbalance here at the O level, 99 and also the 98. And there is a lack of interest already at the 97. So that means lower of the bull control level. You see all this protection of liquidity here provided. That means this would be a hard time after seeing the confidence of the people who bought already here with this rejection. It would be a hard time to get that lower than this here. Anyway. You see then now we can make see even some range play before people deciding if we get again to the low, to see testing the low again. This is possible of course because this is a balanced situation. They could not take out the high. They're staying in this range. You see the volume, how it is developed at this moment. You see still a edge here. That means okay, this is still the situation. They showed the interested to get higher, but they cannot find buyers above here, or there are still people to trying to protect their shorts coming here, seeing here, coming here, starting out of the open range and seeing here in the volume the separation. That means of course there is another bear control level overall in the market from today's morning. This was no trading level, but it is a marker. Let's call it a marker kind of for the buyers, for the market buyers, for the bears. And so this is still not hit yet. That means we have no confirmation. But if we take out, no, I don't say that this has to happen, but if we take it out now with the same behavior like this here, this level, then we have a chance to get to the open range high and even go to the pre-market volume edge 24. So this is important. And if they cannot and go again into strong selling below this level, this volume edge, you see this here? Where the VWAP is, you see here in the composite profile, here at the moment profile, then we have the possibility, of course, that they're getting again lower and testing the next area. This is from the 95 and down to the 91, and then they can even go lower down to the if they take out even this area here of 86, then we have still a third area where we need to see increasing sell volume again. So let's have a look what they're doing right now. Okay, they're testing it. You see, weren't successful. Still a lack of interest. Okay, measuring the success of extending and getting back again to the eye area. Okay, see, this is so far not so super. A little bit. Some people tried here. You see, some people tried, but you see now again. Oh, delta. That means the failure is getting at least a little bit more probable, but no reason to trade here. I'm just telling you what I see at this moment. Okay. Right. Okay. Yeah. Sellers getting back, taking out the high here with high volume. So again, low volume, no token out. That means they prove now at least the level here at the 89 because this is the next. Okay, they've proven it. Okay, they already have proven it, and now they're fighting. Do we see more initiative selling or not? So will this be staying as an excess if they can now defend this next area, or will we see a second try on the downside and getting a big second leg overall? But I think that's very interesting. You see how on the micro level they're trying to work out, trying to make new prices and trying to get in for reading signs to get into the next higher balanced area. So when you're trading this kind of market, you of course always only have about 3, 4, 5 ticks targets, which work out pretty good. You see this here, rejection signs, 1, 2, 3, 4, 5 to the edge here. You see another rejection sign. You say, okay, again, failed breakout. I'm taking on this trade again here. Maybe you've already took it on here, got stopped out. Second chance here, 1, 2, 3, 4, 5 again to the edge. So you make your points here. Now you see what you see, reaction. Do you want to see, of course, responsive selling? Now thinking again
From the short side, you want to see them going here to this high volume edge, and what you want to see is rejection again. You see this now, here it is happening already. One, rejection number one, rejection two, not able, oh no, this is not, they took out the high, sorry. Where do they reach the edge the first time? Oh, they reach it here, all right, you see this here, rejection. You don't get a double rejection here, so no entry, because only one candle and rejection. We're getting up. Now we really get to the volume edge, you see here. People buying, buying, buying. Okay, rejection number one. Only small try of buying and rejection two. You would have entered here, and you know now there's only the target, the next POC. 1, 2, 3, 4, you hit this. So you see this is only, when you're measuring, this is only a 1-to-1 risk reward. This is scalping then, but you can do so if you have your mind under control. But for me, to come now to an end, and I will end the session then at 10:30 today because I have an appointment, have to go to the city, to some people's office, make some bureaucracy stuff, paperwork for my office. But what I wanted to tell you is this is not the way I'm trading, because this is so cognitive exhausting. You understand? I would have need to be in this move here today, which I didn't got in because this was not provided, but this was everything that I would expect. You always get this one direction and turn direction normally in a good day in Bund, and then we get into a balance phase before they may try to test again with an imbalance phase. So this is normally the way you can prove yourself in Bund. So no trading for me now. I'm not even nervous. I don't want to click the mouse. I know I was flat then. I had no trade today. This is no problem for me because there is a lot of opportunities left in Bund every day and every time. So you know what? No reason for me. I know this is not then my trading time anymore. I'm not gonna trade. I'm not gonna look even for trades. I will lock now my trading here, my live account, and that's it for today. I will end the session in about 10 minutes. As I have to leave then at 11 o'clock, we can make another question and answering. Yeah, Bart was writing me, I have to switch to the actual situation, to the screen. That was at 10:17, 5 minutes ago, as we took out the 98. Yeah, but that's right. But as I told you, I see the signs of excess on the downside, and we are already having move 1, move 2 in Bund, and this is not then the time anymore where we are looking for a trade, because I know I got proven so many times that this is a very good strategy to know when to end trading when Bund already gives you a good volatile move in both directions. So that's it for me. And so you're right. As you see the importance again from this bull control level, you see this as they take it out with volume. You had this opportunity to re-enter this distribution here. All right, but we see this was the level we don't want to see get taken out, and we know we're getting back into this option with this target here. I hope you agree, Bart. You see this? We have here the edge. Sorry, we have the edge here. If we re-enter this with volume, we have opportunity that they ran through 80% rule, ran through to the other side of the edge, and they did. So you're right. You're absolutely right, Bart. As I confirmed that this is now a bull control level, as some people tried now to get back, taking out the bear control level, and confirmed now with a bullish control level at the micro picture, of course, means if they take it out with volume. And the conclusion is then, of course, what happens here with a weak pullback, then now we're having the chance that they get into the lower distribution. We have here a B model distribution from the trend, and they did. You're right. You can see now, you can rely on this. This is auction theory, but you have to measure at the right point. So it was not for me to enter for the short, or already here. We want to see the outside edges to get into range kind of trades. Actually, yeah, you're right. This is what one could have traded, and not for me because this is not the time anymore, but you're totally right. This is a good scalping situation with a risk reward of about, I think, 2 to 1. So when you see the pullback here was weak, you're entering around here. Sorry. 1, 2, 3, 4 on the downside. The edge here is at the 87. You're entering with the pullback. The stop must be 2 above, 1, 2. So here 1, 2, 3, 4. 1, 2, 3, 4, 5, 6. So 7, 7, 4. Yeah, that's good. 1.75. That's very good for a scalp. Yeah. This would have been now has taken out this important level, which we mark green at this moment here. Remember, see it as importance. This is option theory. And this is the evidence that it that it works here live. Thank you, Bart. All right, guys. So, normal trading then for me. I don't know what you say. Give me some feedback. We can make some question and answers again for at least 15 minutes maximum to 11 o'clock. Then I have to leave. Give me some feedback. Where are you in your trading? What's the situation? Have you problems? Do you still underperform? Is this information I gave you today? Is this maybe something that seems obvious, reasonable to say this is something that could really make changes now to your trading? Is this something where you say after maybe already some kind of veteran, years and years of trading, can confirm this for the greenhorn, for the rookies, to see that this is valuable thinking and trading? It would be wonderful, nice to talk about this. I will be again today in a public chat. That means starting now from 10:30, and at least for 15 minutes. Some questions would be super cool because I gave you now 1 hour and 1.5 hour, I think, very valuable informations. And I will be interested. What do you say? Do you agree? Do you disagree and say no? I don't understand this. This is not making sense. Because anyway, I think you're in this group here now, Discord room with Matthias and me, to either find out if trading is something for me, because you're already doing it for a long time. Then it's maybe good while entering this group and at the end find out, the terms of thinking Anton and Matthias is telling every day and so on, this is nothing for me. I saw trading is totally different. Then we may save you a lot of money, because you then may stop trading and say, I now see there is no holy grail in one single instrument, but the holy grail is more keeping it up together, technical side and the mindset, the psychological thing. Or you're other guy and say, no, I am in trading new, or also again at trading for some months or even for years, and now I see this process give me new information which can make me now really get better, because I'm changing the way of my old behavior patterns that force me into bad trading behaviors. And also I can grow in my technical understanding, because sometimes I'm sure that some guys also are maybe having still technical knowledge gaps that we can fill. And so by talking so far, what I'm telling you, it's still at this free level of our membership where you're all getting this for free. You don't have to pay money for some guy. You get wonderful, perfect, and maybe advertising and cool commercials and get into it, then pay maybe 8,000 euros and then find out, wow, the theoretical stuff is very, very good, but practical, nobody can teach me anything. I think we make ourselves a little bit naked and transparent to avoid people giving us money then later for teaching them, when see that this what we talking sounds to them like bullshit or makes no sense or whatever. So we should talk about this if there's some valuable information. And you can also find some critical words and say what was interesting, where you agree, where you disagree, because at the end, this will make us both, from our teaching side, so me and Matthias and you, better, because we may see that we cannot work together with certain people who have different point of view, and who can work with us together, because he and she will make us better in the way we talk and teach. And on the other side, maybe you get better because we already give you some information that was not so given to you in the past. So thanks for watching. This is the 2-day session end, 10:30. And I will be available now again for question and answering for at least 15 minutes, but latest till 11 o'clock, then I have to leave due to an appointment. So thank you, and maybe if you have questions, let's discuss it, what you're impressed of today. And thanks for watching so far. Anton Höpfel for Manapa. Bye.